ETH currently, I think, is in its 1.0 phase and it's transitioning to 2.0. But in the 1.0 phase, Ethereum had the ICO boom, NFT boom. That brought Ethereum to almost 5,000 in 2022. And then in the last 18 months, we had ETFs and stablecoins, and that brought Ethereum almost to 5,000. But that was 1.0. Unlike the crypto bear market of 2022, Wall Street is building on Ethereum. There have been major tokenization wins over the past 12 months. ETH 2.0 is the period when Ethereum not only becomes central to a lot of growth vectors, but ETH, the asset, becomes money.
The market has spent the past year calling Ethereum a disappointment, pointing to its underperformance, questioning its relevance, and wondering whether its best days are already behind it. But according to Fundstrat's Tom Lee, what we're witnessing isn't the end of Ethereum's story. It's the moment Ethereum sheds its old skin. And if that sounds dramatic, Tom Lee isn't alone. Bitwise executives Matt Hugin and Ryan Rasmussen recently compared Ethereum's transformation to a phoenix rising from the ashes, a rebirth, into something larger, more valuable, and potentially far more important than anything we experienced during the ICO mania or NFT explosion. Ethereum 1.0 introduced the world to decentralized applications. Ethereum 2.0 could introduce the world to a new form of money itself. Because unlike 2022, Wall Street isn't abandoning Ethereum, it's building on it. BlackRock, JP Morgan, Robinhood, Coinbase, Kraken, and an entire wave of tokenization platforms are laying the foundation for what Tom Lee believes will become the next financial operating system. And if he's right, then history may look back on this period not as Ethereum's lost cycle, but as the calm before one of the biggest transitions in financial history. Today's video explores Tom Lee's explosive thesis on Ethereum's evolution from Ethereum 1.0 to Ethereum 2.0, why macro conditions may finally be turning in crypto's favor, how Robinhood and BlackRock are helping transform Ethereum into digital money, and why some of Wall Street's biggest names believe Ethereum's future could dwarf its past. If you enjoy deep dives into crypto, macro, and the future of finance, make sure to like this video, subscribe to the channel, turn on post notifications, and let us know in the comments, is Ethereum about to begin its greatest chapter yet?
There have been macro headwinds in early 2026, but we believe there's signs of a bottom in crypto. So you may be wondering, why is crypto so weak? Especially considering that in 2022, during that crypto bear market, there was a huge amount of deleveraging, huge amount of regulatory headwinds, and a downturn in activity. In 2026, the headwinds have been, number one, monetary policy flipped from dovish to hawkish. And what I mean by that is, at the start of this year, the bond market was pricing in 2 cuts from the Fed. But because of the Iran war and partly from AI spending, that's now shifted to 1.6 hikes. So the bond market has removed 4 cuts from 2026. That's a lot of tightening. That being said, I think the bond market's going to start pricing in cuts this year. One of them is because inflation's pretty weak. Look at the June core CPI, which came out on July 14th. That number for core was negative for the month. There was actually deflation in the US. It's been a long time since core CPIs had deflation. And I think in general, we believe the inflation story is much weaker than many people believe. The second is the Clarity Act. That's an important act. It's in limbo. That provides a framework so that we know which regulatory body can set national policy for crypto. In this case, it's the CFTC. But the prediction markets only see a 44% chance the Clarity Act gets signed into law, which is below 50%. Insiders in the industry think it's much higher. So, for instance, Coinbase's vice chairman thinks we're at the 1-yard line. And Senator Cynthia Lummis, who's been working tirelessly on this, believes that we are at the point where they're going to land the plane. The third has been AI FOMO. In case you haven't noticed, a lot of AI stocks have done very well, and 86% of all venture dollars this year have gone into AI. That's siphoning money away from crypto. But things are maybe changing. For instance, Chamath and CNBC says, I think you're going to start to see a little bit of the wheels come off of AI spending and profits. Well, when that starts to cool, that's good for crypto. The fourth is the crypto sector depends on the financial sector as the umbrella. And if you look at the S&P 500 sectors year to date, leading year to date are things like memory, tech, semis, energy, and materials, all related to the AI supply chain. And financials are one of the worst sectors year to date. So that acts as a headwind for crypto. But we believe crypto spring is here, and it's not a straight line higher. DeMark Analytics and Tom DeMark, who is our timing advisor for market purchases of crypto, believes everything appears to be in order for a market bottom and that the Ethereum risk reward is to the upside. These are pretty constructive comments. He's citing the 1987 analog. Ethereum today looks a lot like the S&P in 1987. And as you can see, in 1987, over the next month, the S&P recovered nicely. This implies 2,200 for Ethereum in August. Steve Sutmeyer, former Bank of America technical strategist, actually put out an alert. He says ETH is stabilizing on a tactical basis. And he believes that if we can clear several key levels, that we can see 2225 to 2239, very similar to Tom DeMark's targets in about a month. Now, you might say, well, let's say crypto's bottoming. You also have to believe in a future. And I think the future market for Ethereum is exponential. Here's some wisdom from Warren Buffett in his 1987 shareholder letter. He said, the market may ignore business success for a while, but eventually will confirm it. Well, ETH currently, I think, is in its 1.0 phase, and it's transitioning to 2.0. But in the 1.0 phase, Ethereum had the ICO boom, the NFT boom. That brought Ethereum to almost 5,000 in 2022. And then in the last 18 months, we had ETFs and stablecoins, and that brought Ethereum almost to 5,000. But that was 1.0. And currently, Ethereum's in a drawdown. Many people are going to look at ETH here and say, look, the top of the range is 5,000, and they don't see further upside. But I'm going to disagree. I think people are rage quitting at the bottom for Ethereum here. Why am I saying that? Well, unlike the crypto bear market of 2022, Wall Street is building on Ethereum. There have been major tokenization wins over the past 12 months. BlackRock's BITL, JP Morgan's Money, Securitizes continue to have a lot of success, Ondo Finance as well. And there's been a lot of layer 2 wins, Robinhood's Chain, Coinbase, Kraken's Inc. But maybe the most notable breakout is Robinhood's Chain built in Arbitrum this year. Vlad, who runs the Robinhood, believes that everything running on traditional rails will eventually become on-chain tokenized. Now, that's a view that we hold as well, but that's a big deal. And the Robinhood chain, which just launched in July, has now processed more volume than many crypto exchanges. And on July 9th, it was 560 million. That's already crossed $1 billion as of today. In fact, as we point out, the Robinhood chain is a big deal because it uses ETH as the native gas token. The transaction fees are denominated in ETH. And they settle on the Ethereum L1. Guess what? That sounds like ETH is money. That's why I think this is important. Robinhood chain is making ETH money. And here's a bunch of other bullet points, but let me just highlight again. The Robinhood chain uses ETH as its native gas token. And it's not just real world assets that work well on this chain, it's memes as well.
Tom Lee's argument begins with something many investors have overlooked. Ethereum isn't trying to survive this cycle, it's preparing for the next decade. Macro headwinds, delayed regulation, AI sucking up capital, and weak financial stocks have all acted as temporary weights on the crypto market. But Lee believes those forces are beginning to reverse. Inflation is cooling, regulatory clarity may finally be within reach, and some of Wall Street's most respected technical analysts are starting to see signs that crypto's bottom may already be in. But price targets and market bottoms are only part of the story. The bigger question is this. What happens when Ethereum stops being viewed as a speculative technology and starts being treated as essential infrastructure? In the next section, Tom Lee explains why Ethereum's greatest opportunity isn't another NFT, boom or ETF. Headline, it's becoming the financial rails of the digital economy itself.
Ethereum also, unlike the 2022 bear market, has a continued deep and growing developer bench. There's nearly 6,000 developers on the EVM stack or Ethereum. That's more than all the other chains listed on this table. And by continent, you can see, and this is data from iTrustCapital, Ethereum is the #1 ecosystem in Asia, Europe, North America, Africa, and South America. So again, I'm going to come back to the statement from Warren Buffett from 1987. The market may ignore business success for a while, but eventually will confirm it. So what does this mean for ETH 2.0? Let's look at Amazon as an analog. Okay, Amazon 1.0 saw Amazon from 1998 to 2010, okay, a 13-year period, be stuck at a $6 peak for 12 years. And in the middle of that period, AWS was launched, which was a huge deal because over the next 12 years, AWS became massive, along with Prime Day, Amazon Studios, and their AI focus. But look what happened to the stock. On Amazon 2.0, the stock went from $6 to 241. Look at NVIDIA and their transition from a 1.0 company to a 2.0. Well, in that 17-year period listed here, NVIDIA had the CUDA platform, which is actually an important programming language that's still what's used for GPUs today. And it's the main reason why NVIDIA has almost a near monopoly on AI, high-end AI chips. And then in the 2014 period, they launched, or their chips were used by crypto miners, yet NVIDIA stock basically kept peaking at $1. At NVIDIA 2.0, ChatGPT was launched in late 2022. Blackwell got announced in 2024, and the rest is history, and went from $1 to 197, almost a 200x as NVIDIA went to 2.0. And the final example I'm going to give you as addressable markets expand is JP Morgan. Okay, JP Morgan over this 30-year period, okay, transformed. Now, keep in mind, the JP Morgan today is not the JP Morgan that saved America in 1907. Actually, the JP Morgan today started off as Chase. Chase acquired chemical and manufacturers Hanover Bank. In 2000, the year 2000, Chase acquired JP Morgan. And then over the next 15 years, acquired Bear Stearns, Bank One, Washington Mutual. But despite all that, you can see these acquisitions here. JP Morgan was stuck and peaked at around $70. But with the acquisition of JP Morgan and Bear Stearns, Chase became a global bank, a truly global bank. And as you can see, the 2.0 played out over the next 15 years, and JP Morgan stock went from $58 to $334. So you can see when the addressable market increases, the asset price rises. And sometimes it takes time. Well, that's why I'm talking about ETH, because ETH 2.0 is the period when Ethereum not only becomes central to a lot of growth vectors, but ETH, the asset, becomes money. So the first thing that's going to drive this is that we are in a new foundation area. The Ethereum Foundation, which is a nonprofit, is still central to a lot of the core for Ethereum, but it's not the only story. In fact, today, given regulations, it may no longer be necessary to have nonprofit foundations. The second is agentic AI is becoming an important crypto story. Now, you might wonder, how is this possibly a crypto story? Let me explain. I believe in the next few years, there's going to be something that people talk about called the uncanny valley of wealth. And let me explain. Japanese roboticist Masahiro Mori in 1970 published an essay titled The Uncanny Valley. And what he was referring to is the hypothesis that you get unsettled when a robot looks too human, okay? I think that's going to happen in the agentic world. And what do I mean by that? Well, consider the axis being percentage of wealth created by AI, and the y-axis is your satisfaction with AI. AI today can do complex reasoning, multitasking, agentic trading. Generally, that's good progress, and we're satisfied. It actually helps our lives. And it may start to have a machine-to-machine economy, and it might be a rising share of income, but we'll still be satisfied because we're making more money. But at some point, AI could actually be wealthier than us. Yes, I'm saying in the future, there could be a date, and may not be far away, that your agent produces more income than you personally produce. I think at that point, you're going to wonder if you work for AI.
Perhaps the most important takeaway from Tom Lee's presentation is that transformative assets rarely look obvious while they're transforming. Amazon spent more than a decade going nowhere before AWS changed everything. Nvidia spent years trapped in a range before AI turned it into one of the most valuable companies on Earth. JP Morgan became a financial titan only after decades of expansion and reinvention. According to Lee, Ethereum may be following a remarkably similar path. The difference between Ethereum 1.0 and Ethereum 2.0 isn't simply higher prices, it's a change in purpose. Ethereum 1.0 was defined by speculation, the ICO, boom, DeFi summer, and NFTs. Ethereum 2.0, if Tom Lee is correct, will be defined by utility. Tokenized stocks, stablecoins, machine-to-machine payments, AI agents conducting commerce autonomously, and trillions of dollars settling on-chain. In that world, Ethereum doesn't just support the economy, it becomes part of the economy. And that's why companies like BlackRock, Robinhood, JP Morgan, Coinbase, and Kraken matter so much. They're not building for the next meme cycle. They're building for a future where financial assets move at internet speed, and where Ethereum serves as the settlement layer beneath it all. Every transaction that settles, every tokenized asset that moves, and every Layer 2 network that scales ultimately strengthens the ecosystem Tom Lee believes is only now entering its second act. Whether Ethereum reaches those ambitions remains to be seen. Markets are unpredictable, and transitions of this magnitude rarely happen in a straight line. But one thing is becoming increasingly difficult to ignore. While retail investors debate whether Ethereum is dead, some of the largest institutions on the planet are spending billions of dollars preparing for a world where it becomes indispensable. If history has taught investors anything, it's that the biggest opportunities often emerge when the crowd is looking the other way. If you enjoyed this video, don't forget to hit the like button, subscribe to the channel, and turn on post notifications so you never miss our coverage of crypto, macro trends, and the technologies reshaping the global financial system. Share this video with anyone following Ethereum's future. Thanks for watching, and we'll see you in the next video.